Big news on the economic front today. The lowest inflation number for 2 years. It comes just ahead of the RBA's first meeting for 2024 next week. Hopefully, it means rates will start to come down later this year. Let's bring in my colleague Tom Connell. And Tom, looking at that number today, 4.1% annually, how encouraging is that?
It'll be very encouraging, albeit today's number is not a big surprise, but it was better than expected. Let's begin with quarterly inflation, annualised basis. This is the number the RBA considers more reliable. Remember, 7.8%. That's where it was a year ago. That is very high. It's come down pretty steadily since. You can see a big drop there, though, 5.4 down to 4.1%. Even more encouraging is monthly inflation. This is considered a bit less reliable. Not as many items are measured here, but it's also increasingly being considered by analysts as a bit more forward-leaning, an indication of where we're going, and that will be encouraging. You saw it tick upwards there in September. That's when there was a concern, and soon after that we saw one more rate rise. Since then, it's been a steady journey down, and they're saying already 3.4%. That's getting close to 3%, where we're supposed to be. Why such a big drop-off now in September? Well, let's have a look at what has been driving that. In particular, when we look at this, a high quarter can really prop up inflation. This figure here, 1.9%, that was inflation just in the single quarter of December, not the annualised figure, the single quarter. Then we had the latest one in December 2023, 0.6%. So just because of that, 1.3% goes off annualised inflation. That 1.9% has been sitting in the annualised inflation for the past years. That's really been propping that up. And that's all the more interesting because the next one, March, also has a very big high singular figure. It was 1.9 there, it's 1.4 there. In other words, if we get another 0.6, you can take 0.8% off inflation and you're getting to the low threes. So because we've got a big month a year ago coming up, there's real room for improvement. Perhaps for that reason, you've got quiet confidence in the government that we're nearly getting there on this fight against inflation.
But it's really welcome and it's really encouraging progress, and it shows why Labor's responsible economic management, including our cost of living tax cut for Middle Australia, has been and will be so important.
So, Tom, where to from here on inflation? What sort of markers are you looking at?
There's a few good signs. There's still a little bit of wariness around, though, of course. We had not long ago what we saw in retail spending down 2.7% in December. That really bounces around because of things like Christmas and Black Friday. So what's more encouraging is 0.8% is an annualised figure. So that's from the year 2022, 2023. So clearly people have stopped spending. So much of retail is discretionary. That's a really good sign in terms of getting a control on inflation. Unemployment as well. We're not barracking for this to go up per se. Every job's important, but we know it had to go up from those very low numbers. Not only is it ticked up from 3.6 to 3.8, we saw 106,000 full-time jobs go in December. So clearly that's part of the economic slowdown that is happening. We want that perfect sort of soft landing, a bit of a slowdown, ticking up a little bit, not going too high. What are the other drivers, though, that we get from these figures when we're looking at the ABS figures just released? Energy, wholesale prices down 44 to 64%. Now, this is complicated because the good sign is it'll take a while for these prices to trickle through. So we haven't seen this so much reflected yet in inflation, but it will be in the next year. That's really good. But there was a $500 rebate for low and middle income earners that runs out in July. So perhaps there's a bit of pro and a bit of minus on that. Rent is still really high, 7.3% up over 12 months. So that's still putting a real floor under inflation. And remember, rent is paid by about a third of Australians and it's a big percentage of what they spend. So that's one. If it stays that high, it makes it tricky to get inflation down. Insurance, similar story, 16.2% over 12 months. So that's a pretty large spend for people. Again, that's really high. And then we've got the tax cuts that land in September. This isn't too big a concern. On the surface, you go, well, hang on, all this money's being doled out to houses. Will we see that rev up inflation in September? The issue here is the good side for the government. Lamito, this is the first year in many years Lamito is not being handed out. That essentially almost all gets handed out in that September quarter. The tax cuts over a year. So actually people will have less to spend in that September quarter. So that's a positive. So what's the journey down from 4.1%? These are the quarterly figures, not the annualised. We've just had 0.6%. I spoke before about the 1.4% in March. Then we get to June, 0.8%. That was last year. So that's what we'll be replacing in June. That's a lower number. This is the last really big number left, 1.2%. So you'd think the RBA would want to wait, Kieran, see just in case there's a bit more rev up from those tax cuts. It's unlikely, but you never know. But see what that September figure is before they'd be looking at rate cuts. Remember, we'll get that figure in about October. So that's the last really big quarterly figure that's still stuck in the data, if you like, that the RBA would probably want to look at before they have any confidence to actually cut, unless things go drastically bad in other parts of the economy, such as overall growth and unemployment.
So hopefully before Christmas, the first of those reductions. Tom Connell, thanks so much.